The biggest IPO of the year is about to hit the market, and it's none other than Hyundai Motor India, the Indian arm of the renowned Korean automaker. Hyundai is gearing up to launch a massive 25,000 rupees crore IPO on 14th October, set to become the largest in India's history, overtaking LIC's 21,000 rupees crore offering. This also marks a milestone, as it's the first time in 20 years that an automaker is going public, Maruti Suzuki being the last back in 2003. IPO size and structure. Hyundai is offering 14.22 crore shares through an offer for sale (OFS) by its parent company, Hyundai Motor Company of South Korea. Unlike most IPOs, there's no fresh issue of shares, meaning the funds raised will go entirely to the parent company. Hyundai Motor India won't receive any proceeds from the sale. What's the timeline? Though 14th October is the tentative launch date, official confirmation is still pending. Once listed, shares will trade on both the Bombay Stock Exchange (BSE) and National Stock Exchange (NSE). Share price and grey market buzz. Investors are eagerly awaiting the announcement of the price band. Meanwhile, in the grey market, Hyundai shares are already commanding a premium of 411 rupees, indicating strong demand and expectations of a premium listing. Why the IPO? The IPO allows Hyundai Motor Company to reduce its stake in Hyundai Motor India and capitalize on the subsidiary's growth. While the parent company will benefit from the sale, Hyundai Motor India itself won't receive any proceeds. Financial performance. Hyundai Motor India is coming off a solid performance. For the 9 months ending 31st December 2023, the company reported 32,488.34 crore rupees in revenue and a net profit of 4,382.87 crore rupees, with a profit margin of 13.5%. These strong financials show Hyundai's resilience and competitive edge in India's auto market. Risks to consider. There are some risks for investors to note. Hyundai relies on a limited number of suppliers for parts and materials, so any supply chain disruption could impact its operations. Rising material costs may also squeeze profit margins going forward. Competition in the market. Once listed, Hyundai will compete with major players like Maruti Suzuki, Tata Motors, and Mahindra. As India's second-largest carmaker, Hyundai has a strong position but will face tough competition in the stock market. Lead managers and allotment. The IPO is managed by financial heavyweights including Kotak Mahindra Capital, Citigroup Global Markets, HSBC Securities, JP Morgan, and Morgan Stanley. KFin Technologies Limited is the registrar, responsible for allotment.